Hello everyone, Jesse Webb, TradersPro. Market conditions slipped back again yesterday, back from mildly bullish back to mildly bearish. In a bull market, we're continuing to see this indecision and volatility. We had some positive earnings from companies like NVIDIA last night, gapping up big this morning. So there's pockets of good news out there, and I'll show you a couple of charts that are interesting this morning. But this bias, again, as the market pulls back, we have to respect these pullbacks. We need to realize that we are in this trend now. This long-term trend here has shifted, and so the longer term signal is now bullish, but the shorter term signals are what are giving us some of this whipsaw action right now. This means neutral to bearish bias, raising stop losses on winners, selling any losers. This overhead resistance on S&P 500 is just continuing to cause some selling at this location. We're just getting a ton of chop right here, and we haven't really had any confirmation. Just a lot of indecision this last few months. We saw a pretty large move down on the momentum indicator. It had gone all the way up to extreme and then all the way back down again. So just a lot of volatility here in the last couple of days. You see the chart here when it spiked all the way up. And again, I would expect that once it reaches that upper level, it always pulls back. The length of the retracement, now we're back to this 50%. So you can see just the amount of volatility that's happening in the shorter term. Breadth is also ticking back down a little bit. So again, it's just still a lot of mixed signals right now, which is not real conducive for breakouts or continuations or even buying the dips right here. We'll see if we get some dip buying in today's market. Just based on NVIDIA, there might be some positive interest in some of the earnings reports and some of the companies that are actually doing well right now. This overhead bearishness now on the buy-sell ratio, seeing that tick back up again here as well. So it's just been this real tight consolidation range. Looks like that's going to continue to be the case. Sentiment also, you can see how we pulled all the way back off of those highs. In the one of the charts that I wanted to go over was this S&P 500 chart over the last couple of years. Really, this was kind of the COVID lows back here as we continue to move higher. One of the things to notice in bull markets, we just get these longer stretches of green. Even if we get a pullback, those pullbacks don't last very long. We get these long sections of trending moves. Once we hit that bear market, notice with the direction of the trending move, you get a lot longer bearish, in this case red moves. That becomes the bias of that trend. In terms of focusing, this upper long-term trend would have been down during those periods. Now it's shifted back to up, and you're seeing these shorter tails of retracement. Now again, in any market condition, we just don't know which direction, if it's going to continue to slide, so we have to focus on that and be aware of that. And now we're getting these longer periods of green. These are not super long, but this period right here of green and then back to yellow and then green, that's been our last couple of months. So just a lot of volatility there. Nonetheless, this overall trend has shifted. Unless we really get some sharp selling, then buying these dips and watching for these opportunities on these pullbacks is still the overall play. Now I'd be watching this because this currently is not. When I talk about these colors and as they shift, that just creates additional confusion. The market is indecisive right now. It's not trending. It's just stuck right in this middle range. And when you see all of the color, what you want to see is you either want to see all green or you want to see all red, just depending on what the direction and the strategy is focused. So this is where we're at right now on S&P 500. But this trend now is, if we could get a breakout of this overhead resistance, we may see some advancement of this current green trend. So keep an eye on that as you're building out your bias currently for your overall direction and strategy. If we look at some of the recent muscle stocks here, let's take a look at the new buys. There wasn't a lot of new stocks in there yesterday just because of how hard the market sold off. And so some of those are becoming fewer and fewer. Biomed stock, Moon Lake, nice pattern with the breakout, counter trend retracement right here. grab this marker. You can see that support. So we break out, we retest. Not a real solid confirmation bar, but it's getting closer. Definitely one to add to the watch list and keep an eye on. VIST, potential breakout. Decent bar yesterday where you have that bottoming tail bar. And having a retracement, same story here, working on support, now looking for some more upside there. That's an oil stock, seeing some oil stocks come to life a little bit the last few days. More biotech, biomed, PCVX, RRGB, Red Robin, retail restaurant, nice confirmation bar right here, and a pretty smooth pattern overall. By smooth pattern, I just mean the amount of volatility that's happening. If we can get you get these nice smooth trends versus up and down and up and down, those can be good candidates to look at. And as you're focusing on the pattern, we're just trying to avoid this. We don't want to be involved in that part of the trend. This is the location that we want to start to become interested again. Instead of here, yes, you do miss out on some lows, but there's really no indication that it would continue to bounce yet from here. It's looking to potentially could continue to drop. So we want to avoid that portion. We want to focus on just this trend as it's turning that corner and starting to have some momentum back up. So nice looking chart pattern right there. KNSA, another biomed pharmaceutical stock, nice confirmation breakout after a low. It's a pretty significant low here too. Keep an eye on these biotech, biomed. Those are the ones that are continuing to work. You're just seeing a lot of money being pushed into those, and there's a lot of opportunity right there. That's going to conclude our update for today. Everyone have a great day today.